Well, shares of the Chinese property developers today are all trading lower in China. Vanke, though, has just turned flat here. Shimao Property said it recorded 1 billion Chinese yuan worth of sales in the Golden Week holiday that just passed, and said it is on track to meet its full-year sales target. Most of the projects were located in China's second and third-tier cities, which have been relatively stable. It's a different story, though, in the country's biggest cities, where the once red-hot property market has seen price declines. Peter Churchhouse is property director at Lim Advisors and joins us now from Hong Kong. Peter, would it be fair to say that the housing bubble that some people had expected or that some people said was the case in China is now burst well and true?
Very much so, well and truly burst, and certainly in markets like Shenzhen, Guangzhou, and the southern part of China, we're expecting to see more of the same in cities like Beijing, even some of the western cities which have held up pretty well. But definitely the bubble has burst. Property sales are down very, very dramatically in terms of volumes, and pricing is off as much as 30 to 40% in some places.
Have the markets priced in that in terms of earnings expectations for these Chinese developers?
Well, the stocks are down anything up to 60, 70% so far year to date. However, I don't think analysts and investors have really factored in the downside risk to earnings. At the halfway mark through the first half of this year, property developers in China had only achieved between 20 and 30% of their targeted sales for the year. So most of the developers have been scrambling to downgrade their sales targets for this year and also for next year. We've seen analysts downgrading earnings forecasts for both years as well. I think they have not yet downgraded it enough. I think the earnings are going to disappoint very, very significantly on the downside in the China property space this year and possibly even next.
You know, we've also been hearing anecdotal evidence of some property developers selling units at below cost just to clear them off their books as well. What kind of impact is that going to have as we see these companies grappling with what I'm sure to be a much lower demand picture, but yet costs on one side also rising as well?
Absolutely. Costs have risen for most developers, not just in China, but around the region, anything up to 20, 25% over the last 18 months or so. Steel prices in particular, cement prices, labor costs have gone up in China. So yes, a very, very significant increase there, but prices are coming down in terms of the product that they're selling. Also bear in mind, a lot of these companies have significant debt on their balance sheets as well. So they're very concerned about having to repay those loans. They're having trouble rolling over to get new loans to pay for land that they've already committed to acquire and for construction. So some of these companies are in a bit of a jam right now.
Do you think we're going to see any policy measures from the government to try and boost the property sector?
I think certainly. We've seen, obviously, in the last 2 years, very significant austerity programs to slow the market down. Well, that's actually happening. Those austerity programs have worked. But we are seeing around the countryside now, many of the cities are reversing those austerity programs that they put in place over the last couple of years. Cities such as Tianjin, Nanjing, Guangzhou, Shenzhen are actually rolling back some of those programs that they put in place. So that I think is going to then shift perhaps at the national level, where we'll see also programs to roll back some of these control measures. For example, easing credit conditions, cutting interest rates, lowering the reserve requirements for the banks, and so on.
Okay, Peter, thank you so much for joining us today. We appreciate it. Peter Churchhouse is property director at Lim Advisors, joining us there live from Hong Kong. Don't forget, you can also get the latest business headlines on CNBC's new mobile news service that is specially tailored for your phone. All you have to do is enter asia.cnbc.com on your cell phone, and you'll be up to speed with the latest market-moving stories. We've got lots more coming up in the second hour of CNBC's Cash Flow, including continuing to track the markets in China.